Cathie Wood investing moves have been followed by new stock market enthusiasts and are always seen by people as guaranteed win. Her most recent move was purchasing over 2.6 million shares of Palantir Technologies company stock in her portfolio. She hasn't publicly spoken of this decision yet, and fans are striving for an answer. I'm here to break down whether this is a smart move by analysing Palantir and its future potential. With over $1.4 billion in revenue for its first month of 2021, Palantir saw a 30% growth from year to year. And while this is a great progress for people who had already invested, other investors like Warren Buffett would tell you not to touch that stock by any means. I personally can't blame them for thinking like this. This is, after all, a company with an accumulated loss of nearly $5 billion at the end of 2020. Numbers aside, PLTR's long-term durability and hopefully its sooner than later path to GAAP profitability will be a function of the durability of its technology. An analysis of the company's core competencies, technological and otherwise, informs the long play, which is to say that an understanding of what Palantir is really good at helps to evaluate a long position as well as consider alternatives. As for now, Palantir's forward price of earnings ratio data of 169.49 in the first figure implies earnings of around $254 million against 1.78 billion shares outstanding. Presumably, this is an adjacent earnings estimate, as Palantir realised adjusted income of a little more than $104 million at the end of 2020, specifically using adjustments to back out stock-based compensation and employee payroll taxes. It seems unlikely the company will turn a profit in 2021. I chose to compare Palantir with IBM and Amazon, as these firms also have strong relationships within the government sector, and each works with Palantir to varying degrees. They accordingly simultaneously cooperate and compete each other. Palantir's journey to their $4 billion by 2025 target will be powered by their flagship applications, Foundry and Gotham. The former is, in effect, an ontology-driven analytics tool, and the latter is, using an equally simplistic description, a decision support system. I have chosen to segment Palantir's technology into the software and platform layers in the figures above. The company notes that Gotham and Foundry enable institutions to transform massive amounts of information into an integrated data asset that reflects their operations. Users can build on top of this to assist to make data applications and actionable. Palantir's application enable people, whether they are workers on an assembly line or soldiers in the field, to work with data even if they have never written a line of code. Rightfully, much of the post-IPO focus has been directed towards Palantir's software layer. However, the company's platform layer, and specifically its Skylab and Apollo components, should not be overlooked, as I surmise it is equally and perhaps even more important than the software layer. Most technology companies, and most companies in general, typically have particular competencies in their core, regardless of how large their overall portfolio may be, and this core serves as their engine of innovation and competitive advantage. In describing what I think are Palantir's competencies, I will make references to 3 posts by members of the PLTR's technical team. Number 1. The company may have certain unique processes in regards to the design of extremely complex distributed application software architectures. Foundry and Gotham are extremely complex pieces of software. The companies explain that every Foundry and Gotham installation is comprised of hundreds of microservices, front-end applications, and database systems. It can be said that Palantir maintains a sky full of clouds, in the sense that every installation itself is a complex cloud-native application of which the company maintains several hundred. For readers unfamiliar with microservices, a simple illustration may help. Number 2. Palantir's abilities to implement and manage such complex application architectures in a variety of deployment scenarios, including high-demand military intelligence environments, represent an additional strong advantage. Not only are Palantir's applications complex, so too are their deployment scenarios. The company notes that they maintain many different types of implementation environments for their customer base, with implementations that may spread across multiple cloud providers and varied on-premises setups. Foundry of about 20% on-premise, and for Gotham about 80% on-premise. Sensitive implementations, typically government-related projects, are noted to require management of data in classified environments, often in physical separate data centers and networks without internet connectivity. A more simpler answer comes from the CEO. Problems come in radically different shapes and sizes, so Palantir has built software that becomes part of each of our customers' environments, whether they're operating in the Humvee, on an oil rig, or at 30,000 feet. Palantir developed Skylab and Apollo, its two bespoke platform layer system, to navigate and manage the deployment complexities inherent to their software and deployment scenarios. The former used to manage individual environments, and the latter used to facilitate management of multiple environments. Number 3. The company's implementation teams may exhibit particularly strong domain knowledge to drive the design of sophisticated analytical models. Many people often believe that analytics software like Foundry or Gotham magically does something useful and interesting out of the box. The reality, of course, is that powerful software applications such as these can require significant domain knowledge to implement analytics models that are subsequently used in different real-world scenarios. And this domain knowledge can be just as valuable as the underlying software. One would expect a reflection of the value of this knowledge in Palantir's sales data, and that is perhaps exactly what we see with an average revenue per customer of $7.9 million and an average revenue from the company's top 20 customers of $33.2 million. With the understanding that Palantir's legacy stems from the design of intelligence-related analytics systems, their required domain knowledge from such development work may be uniquely defensible and difficult for others to replicate. Palantir's product stack and supporting processes hits me as highly durable, coming with several enduring advantages. Of course, durability and valuation are two different things. If the firm's valuation commensurate with the market advantage and potential, I am unsure of the answer. But long investors like Cathie are likely well aware that a number of analysts have set price targets well above the $25 share, which is roughly where the stock is trading as I write this. Perhaps it's worth noting here that the company estimates its total addressable market of $119 billion across government and commercial sectors, although I always encourage investors to view technology firm market estimates with a cautious eye. Overall, I tend to lean towards a cautious, bullish long stance on Palantir. In other words, I would be skittish betting the farm here. But I think putting some money on the table and letting things ride for a while could make sense as one seeks to exploit the growth play. It should be said that I think an investment in the firm, while it remains unprofitable, is necessarily speculative, and I would expect Palantir to realise continued losses for years to come, as it will almost certainly incur massive stock-based compensation expense to retain existing and attract new engineering and product development talent, the most important resources as I see it for a company like this. Of course, Cathie may consider Palantir as a pseudo-hedge for her bet. As remarkable as Foundry and Gotham are, the United States and her allies obviously can't rely on a single company for their analytics center, warfighting and intelligence systems. While I continue to suspect Palantir has built itself a good competitive moat, do not think that the co-opetition, particularly Microsoft and Amazon, are still going to sit still. To that end, investors looking to jump on board with Palantir might consider spreading that investment, perhaps with a 50-50 growth maturity allocation, selecting either Amazon or Microsoft as the hedge. For those investors who manage to pick up shares below $10, Palantir sounds as a good long-term bet. For investors who are thinking of buying in now, I am less certain, as discussed earlier. But I am inclined to think a small to moderate position is a reasonable strategy in any attempt to capture the growth industry. Generally, I suspect Palantir's government and military intelligence opportunity is likely to continue its strong trajectory of growth over many years, whereas its commercial push may find a more muted reception and more competitive hurdles. In my view, investors are rightfully excited about the company and its prospects, but they should also avoid notions that Palantir's technologies are the holy grail of data analysis. Of course, the information displayed on this video may not come out as expected, and this is why I also always encourage people to do their own research as well before investigating. But by doing my research, I came out to this conclusion. What do you think of Palantir? Would you invest on it now that it seems to be on its prime? Personally, I really can't tell if Cathie's decision was good or bad. Even the most experienced stock market analysts have controversial thoughts on Palantir. Let me know what you think in the comments down below. And don't forget to like, subscribe, and hit the bell button for notifications of our future content. With that being said, see you on the next one.